So for this week, let's see which pairs we can find opportunities on. Mm, so let's start with I, it's been a while I've looked at the USDJPY pair. The whole of last week we were on gold and 50 index. So this
Yeah.
week let's see USDJPY. Let's see. I don't have any reason for going on to USDJPY to see if I can get setups, but let's just
Mm.
see what opportunities we may find from that pair. So let's start from going back to the monthly time frame, which is 1 month. And this is the paid version of TradingView. I subscribed for the paid version. Um,
Oh, okay.
I think it's the essential is something around 150 or $60 a year, something like that. But let's see. Yeah, so that I can get enough functions and especially to also be able to set alerts. So
Oh,
we can see that the pair um is from the monthly time frame, at least what this paid version can give. She's showing that is very bearish from the top. Um, so it's bearish from top up to here. Okay. So bearish means that we are getting um we are getting a lower high, lower high, a lower high. I'm trying to see if this is a valid low. A lower high. Then we get a lower low, kind of higher low, a failure swing, and then a high. We get a high here. I don't know why the thing is not giving me an opportunity to. Yeah, let me just make it here. And this is where we are now, something like this. So let's see. Is the screen showing very clearly or is dark?
it was kind of dark, like
Okay, so
a size book.
let me try
Mm.
to change the way it looks. Mhm. Is the white okay? Is it clear for you?
And the white is clear.
Okay, good. So we have something like this. Um, so up to this point, I think we are bearish up to this point. Up to this point, we are bearish here. Then we can see that we have the last low. This last low was swept by this area. So we have this high, which swept this low, and quickly price has taken that high out into somewhere here. Um, do we have this high taken out yet? Let me see. Is this one taken out? I think so. Yeah, we swept it a little bit. So I can tell that from here that we have break of structure. We have a break here and we have a break here. Okay, so yeah, so we have this break. And I think it's easy for me to even make it a line, turn it to a line chart so that it will be clear. Yeah. So I don't need to be drawing all this. The line chart is okay. So we have this. uh, we have here taken out, right? We sweep, we hit it. We also have this high also taken out. Uh, we drops to retest, hit, drop, hit, hit. We sit on it, go up, drop, we move up, we come to sit on it again, go up. Okay, and we are pointing up now. Okay, so right from here, I can use this point as my support, my resistance, PSR here. So let me make it a very red line. Let me turn it to a red line. So right from here, why am I using here as PSR, precision support resistance? Because we get a hit there, price drops, which means selling activity happen here. Then we come back, though we hit it and break above it, dropping to be below it, we still fall. So we can still, here is still valid. Sellers are still here. Then we go up, we hit it, we drop a little bit, we break above it, we drop below it. Above it, we still buy up. We come to sit on it, we buy. We come to drop and sit on it. Above it, we still buy. Okay, so we can view this exact point as a place where there is a strong selling activity happening here. At the same time, there is a bullish activity happening. So below it, sellers, we can say sellers will be in control. Above it, buyers are going to be in control. So this is the first thing I want to establish. So all the closes above it, I can view it as indication. Every close above it, that line is an indication, can be an indication that or intention of the market. So closing above it is an indication that market wants to buy from there. Okay, so now we have a close below it, which is indication that we can get sales below this PSR. This little closes below it means we can get sell. But now we are above, so it's a buy. Until we come below, we are above now. So this is the first thing I will establish from what I see here. But the most important thing for us now is that, for me now, is um, the last important high is here. I know I am struggling. The last important high is this point. This point is an important reference high because it breaks it breaks a previous low, which is this point, breaks a previous low, which is this low, and gives us a new low. Okay, and then also pulls up, makes a high, and this high also breaks this low. So we have two important reference points, both here and here, and all of them have been taken out. Okay, so we have here, yes, it's not, we have here being taken out, and we still have here also being taken out. So it's very likely to say that the downtrend is kind of trying to change, but it's going to be more clear if price is to trade into this zone, this area, right? Because this is a more clearer high. The pullback, when price hit this low here, the pullback was much clearer, was much like lengthy, okay? As opposed to when price hit here, this pullback was just a little on the monthly time frame. But at the end of the day, we have structures within, okay? And so we are just using the structures. But overall, this area is going to be a very important target in the future. But we don't want to look at that now because this is a monthly time frame. So the thing is that anytime there is a break of structure or a sweep of an important reference high, what we should expect is that we should expect a corrective. So you can see that when price took the first high, which is where the red line is, when it took it out, we got a small pullback into this place. We got a pullback or into this place. I hope you are seeing that.
Yeah, I'm seeing it.
Yeah, when it hits or close above it, we got a drop, a pullback. So now that price is also hitting the up reference high or this high, we should still expect a pullback. Yes, after hitting it, we have the drop, which is the sell. But we got stopped here because there are buyers very strong above here. Sellers are here, buyers are here. Okay, so price stops here and go up again. Then it comes back down and still gets stops and go up and it's above now. So the only way that we are going to see an extended pullback, at least after hitting this point, is if this price action can go up but fails to close above here. If it closes above here, that's good. Price will still drop. But with the current price action we are having here, we don't need this to take this high. We need it to only retest somewhere at this point. Okay, or we need it to take this guy out. We need it to take this guy out, which is here, this high, this guy out. Once we take that guy out, we can be looking at an internal high taken. And this high should stay like a protection. Okay. So that if we don't take that high out, we take this internal high out, and we don't take this external high out, we will be okay to expect price to drop from here. And then at least target retesting the first pullback on the first break of structure here. Do you get the logic?
Yeah.
So if this is going to happen, it's going to be a very important fall or drop. Okay, and this move might make us very good amount of pips. Um, the other insight that I can gain from this whole chart here is also that let me measure if I measure the whole activity again using the fib from top here even to down here, I can see that price is hitting 23.6% and moving above it and staying above it. Okay, moving above it and staying above it. This is what I can see. So for price to buy, it will always have to stay above the 23.6% if you measure any range, if you are expecting a pullback. So let's say after this long sell, we are expecting a pullback. we need price to stay above 23.6% in order to push up to buy. Okay, and this, but if it's going to keep buying, we should expect at least equilibrium, or let's say this area, or equilibrium, which is 50%. For the first move, it should give an equilibrium price. Okay. This is so it's above. So this is looking good for a bullish market right now, like a pullback for this bigger sell that happens. If I pick the fib down and start it from this relevant high here, this point here, this point here too, we can see that price hit the 23.6%, drop down, hit, come down, and then it breaks, taps into like 38.2%, and it's currently building momentum or liquidity or consolidating around 38.2%. So in such a situation, we are likely to see price drop back to retest the 23.8%, 23.6% here, drop back to retest or even do a very deep retracement. And then if it moves up above the 23 again, then it will now give the buy we are looking for into equilibrium, 50%. Okay. These are all things that could happen. So the point is, you just have to pick a point which is important and to measure on the fib, and you can now deduce what is happening. And the options that will make the most sense, you might want to work with that. But now let's say if I'm using this high as my reference point and I measure on the fib, we can see now that price just went back to hit 100%. Okay, so if we get this kind of movement where price hits 100%, what we should expect is price will always want to retest 78.6% again. Okay, and as long as it stays above 78.6%, we will have buys. It will buy. The moment it comes below 78.6%, it means that the 100%, price has achieved its target at 100% and it's going to make a very big pullback or drop. Okay, so, but we don't need price to go above the 100% anymore. If that is why I said if we get a close above here, then it means that we are likely trying to make a very big bullish move to the upside to cover up into at least equilibrium of the bigger sell we've been seeing from past years. Okay, but so we need price to stay at the 100% again, probably take this internal high and stay on the 100% to drop. And once we go below 78.6, we should expect price to keep dropping into at least here, which would be our early target if we are to take this trade when it gives a confirmation. So you can see that it adds up. The moment we come below our red line, which is PSR, we should expect more sales into at least here, TP1. But we must stay below the 100% in order to sell. So for me right now, from the little knowledge and experience I have, I know that if we break any structure, price will always want to pull back to do corrective. So let's say even from here, from below here, okay, we moved up. So from below here, we got a high, price drops to make a low, Then it goes up to make another high, and it drops down to make a low. Sorry. Then it pushes up to make another high. This is a bullish market, and then it drops um, to make a low. This is the market we have right now. So what is this market? Is it bullish? Yes. Do you see it's bullish?
Yeah.
Okay, good. The only way that we can be bearish is if we have the last important low that made the all-time high taken out. So the last important low is here. So if we close below here, this low, if price drops to give us a take this out, then we are going to be printing bearish market to correct all this bullish move to the upside. So in that sense, we might want to use the fib to check from low here to the up here. So if price does not go up more again and stops, then we might want to use the fib to hit to check. With this, our 50% or equilibrium zone is this green area here. We should expect price to drop into the 50%. Then from 50%, or for smart money, they might be looking forward to buy again anything below equilibrium, which is this zone, discount zone. Okay, so anything price will come and do here, if this two break of structures as price is going bullish, if it's valid, we should expect price to pull back into discount, and anything 78.6, 61.8 around here, smart money or the big institutions will want to buy big, okay, and take price to the upside. So if that is the case, then anything above the 50%, which is the premium zone of this range, we should be looking for sales from that point, from this area. You get the point?
Yeah.
So if we should be looking for sales in the premium side, then we need to further gather more evidence why price, though it is bullish, why price might give us a bearish indication or confirmation here to sell price back into the discount so that we can now find buys up. So this is what we should start thinking about. So once again, this is the monthly time frame, and we can only try to understand the market from the monthly time frame. Let's move to the weekly time frame to see what is happening. So on 1 week, and from here, let me go back to the candles. So from 1 week, we can see that. So what do we want to see in order for us to get a setup or like to trade? One, we want to have our PSR. And two, we want to also have a head and a shoulder pattern before we take a trade. That is our strategy. Okay. So we can see price is buying, and we've realized that it has taken two important highs from the monthly time frame. And we are realizing that this line is the 100%. Let me make it a little bit big. The black line is the 100% zone. And price must stay below that black line in order for price to drop. If it goes above and keep going up, no, it will not be dropping anytime soon. So we that is and we should we can anticipate price to take this internal high out from the monthly time frame as liquidity or as inducement. Okay, so um, what do we see from this move up, the move to the upside? What can we tell? What do we see, or what can we tell if we look at the move to the upside? So first, I would want to look for the head and the shoulder pattern. So I can draw from this low, I can draw this is the first high, a low. Then I can draw a higher high here. And then price drops to make a hit of this neck support, diagonal support. But when price went up to retest or to give us the right shoulder, okay, so let's see, price pulls up to attempt to give us a right shoulder. Then it dropped a little bit, but it goes up and then fails, clears the head out. So if your head is taken away, you can't be alive. Okay, so the head and shoulder pattern failed at this level because we don't need the head to be taken out. Okay, so this one failed. So, but as it failed, let's check if it gave us a new head. So we can still use, let's say we start from somewhere, let's say we start from a point here. We can have a high, a low, and then a higher high, which is our now head. We should expect price to drop into the support or neck, which we can see has confluence with our red line PSR. Now, we should expect a right shoulder to be formed. So we got a pullback. Pay attention that the right shoulder has not taken the head out. So we are still valid. Now, right shoulder forms, it drops down to hit the neck again. Let me open it up so that we can see it clearly. Okay, it comes down to hit the neck. Look at the trend line, okay, of the head and the shoulder pattern I've drawn. It hit it, but there is something important here. It hit it exactly and pulls up a little bit, and then it drops down again and close both below the neckline trend line and the PSR, which is our red line. So this is an indication to me that the market wants to sell anytime it comes below this trend line and the PSR again. Okay, anytime we get a confirmation below this trend line and the PSR, is going to sell. This is the indication. Okay, and you can also see here that here we have the PSR and the trend line. Both of them were tested and price reversed exactly. You can see from this hit. And if also this hit here, price closed below the PSR. So the closest below the PSR are all indications that sellers wants to be in charge below that red line or from that point down. And above it, buyers will be in charge. But this is the indication we have. So we are good to be anticipating a sell below this point. But can we get a buy from the top that will come down before we get this sell confirmation below the PSR and the trend line? Yes. So anytime you have the right shoulder formed, you should expect price to sweep liquidity above the right shoulder. So we have the first right shoulder, and we should expect price to sweep liquidity above the first right shoulder or retest that right shoulder. So this price action right now here, we are likely to see price push up this week to target taking this right shoulders high or either retesting it to have a double top. But I will prefer to see it taken out. But when it is taken out, it shouldn't take the head out. This is the only way we are going to have this sell. So if price hit it and sweep it and reverses exactly at this point, then we might get on, let's say on the 4 hour, 1 hour, we could find a confirmation to get enter into a sell after that high is swept. So let's say we frame our setup just below the 100%. We want to sell below the 100% from the monthly time frame here. Our stop loss is going to be a little bit above the head or even at par with the head, because sometimes price will want to stretch to hunt for stop losses. So we want to take our stop loss. If the head is taken out, we are done. But as long as the head stays intact, we are good. So if this happens this week, we can find a confirmation to sell and target this red line PSR in the interim. Because if it comes here and does not give an engulfing or a bearish close below up to somewhere here, we will still not sell, not have confirmation to sell. But so this can be our initial TP or TP1. Then we should expect price to, if we get a confirmation, drive it down into at least here. Okay. But at this point, or we will still be inside of premium. We need price to come into discount somewhere here before we can now get a bigger buy. But for now, let's just target here. Okay. So if this happens, we are going to have our pattern, the pattern we are looking for in order to take trades. We are going to have it fulfilled. So this week, we need to wait for this to happen. Okay. Now, where is the PSR that we are going to use to take our trade? So let me put a trend line from here to guide the neck here. Good. So we have here. Let me reduce the um good. And let me make it change the color. Maybe blue line. Good. So if price goes up, we will need price to be below the black line. So let's go to the daily time frame at this point. Daily time frame. Good. So now we have our head and shoulder neckline. Price should be below that blue line, head trend line, neckline in order for us to be selling. Above it is a buy. Okay. Now we have this high here which we are expecting price to sweep. Okay, we are expecting price to sweep this high. So we have to wait for it to be swept. Then we have our 100% line also on the daily time frame that is reflected exactly here. Okay, let me adjust it a little bit. Good. So we need price to be below, and that can be our resistance. You can see that if you look at the extreme left here, price had hit and it wicked and dropped to close. Okay, on the daily time frame, we got the close below here. This is where we got the close here. Okay, the wick is up, but it closed exactly at this point. So we need price to be below that in order to sell. Okay, we need price to be below that. Let me put a line. If the meeting closes, I'll send another link so that we finish up. Okay. So I've represented it with a red line now. So we need to be below this red line. We need to be below this red line. Okay. And we need to be below the trend line, which is the neckline of the head and the shoulder, in order to to sell, to hold cells. Okay. So let's see what this week